Hello, hello, hello. I hope everyone is well. Um, in tonight's live stream, I'm going to be doing some stock analysis of Meta, Uber, and Robinhood. All three of them did have a big earnings this week. Meta, if I'll take a look at the share prices now. Let me just load it up. But yeah, it's been a big week for the three stocks. I will also get Twitter up just for a broad reaction to the earnings, and then we'll dive straight into the stocks. And I'm happy for questions to be asked along the way. But this will also be posted to YouTube afterwards for people to watch. So if you do have any good due diligence, please drop it in the comments. But yeah, just getting things sorted. So if we take a look at Meta, so I'll add this to the stage. So as you can see, in the last month, Meta has dropped 13%. And before the drop, they were sitting at $750 a share, and they now dropped down to $622 a share. So that is a massive, massive drop. And then I'll bring the earnings up for you, and we can really see on the face of it why there might have been such a reaction. OBJ indeed. Good evening, mate. I hope you're well. I'm just starting with the three stocks I'm going to be looking into. But yeah, I'm just pulling up a summary of the earnings before I dive deeper so people can really understand what's going on. I thought Meta's earnings were a lot more recent than what I'm trying to find. Another interesting stock that I am going to take a look at shortly is Lemonade. Um, I've been hearing a few things and they've been plucking my interest. So they are going to be next on my massive due diligence list. I've just gone past Uber in terms of earnings. I should have really prepared this, so I do apologize. But I know Meta had a massive tax bill, which is part of the reason why they missed on their earnings per share. That is one of the big things, is they missed on their earnings per share. And I can't find. Oh, there. Right. So the earnings guy on Twitter is fantastic for high level detail. So if we look here, they missed their earnings per share expectations by 84%, but beat the revenue by 4%. So year over year, earnings per share is down 83%, but revenue is up 26%. And along the side here, this is some of the reactions. Some people weren't happy. But yeah, obviously we're going to dive into that a little bit deeper. So that's Meta. I'm going to load up the websites now and we'll dive straight into it. Before we do get started, please remember that nothing I say is financial advice. It is purely for information purposes only. I am not a financial advisor, so I cannot give out that sort of information or advice. Sorry. Just quickly checking something. Everything looks good and healthy on the live stream. How does one enter the live? There. Sorry, just getting the live control room up just to make sure the stream health is okay. So, the first place I always look when I am looking into a stock is on stockanalysis.com. And this is what you see when you first load it up. I'm going to full screen here. So you get a nice little overview of a stock, any recent news, and then you can look along the financials, the forecasts, any major statistics, dividend history if it is a dividend paying stock. And yeah, so if we look over the month, down 13%, but year to date, they are still up 6%. Welcome to the stream, Will. So I'm going to look at the quarterly information. That doesn't seem to be right off the earnings we've just got. So revenue has been growing roughly on average 20% over the last 5 years, which is quite healthy. So that's one thing I'll first look at. I am going to make notes whilst I'm doing it, just for my own knowledge. Revenue is averaging 20% growth. If we keep on going down here, I just like to look through all the financial lines. They've had some legal settlements. I don't actually know what that's in relation to. Interesting. Earnings per share. As you can see, before now was growing nice or nicely, however you want to say it. They do appear to be buying back shares as well. So that's another way that they're returning money to investors. Free cash flow, as you can imagine, is taking a hit as there is a lot of capex spending gone into AI infrastructure. EBITDA is quite healthy, around 51%. Yeah. So obviously, I think we all know income-wise, Meta is a strong business. If we take a look at the cash, they're sitting on quite a lot of cash, and it is grown. Got some long-term investments down here. Got a chunk of long-term debt and long-term leases, but the assets outweigh the liabilities. That is one of the first things I do check also. Okay. Currently got a lot of working capital, which is expected with all the capital they're going through. I'm not going to look at cash flow because I don't think I need to for the size of this company. So they're currently trading at a 27 PE here, and they've been trading around 23 PE previously. So that is a bit more expensive than what they've traded in the past, but the forward PE is sitting around 20. So they should grow into this price range, or the earnings should grow into the price range. Really, debt to equity is lovely and low. I will look at a different website for these because it visualizes it a lot better in my eyes. Yeah, so looking good. If we look at what the forecasters are saying over the next 12 months, we're seeing possibly a 3 to 80% return, but the median and average is around 32%. I never take these for face value or let them dictate my price targets for stocks, but it's always interesting to see what the analysts are saying. These have most recently been updated a week ago, so these are as up to date as they can get. There's nothing else I'm going to look at on here. I think average revenue per user growth has grown healthily as well. Advertising growth is quite good. Reality Labs, I don't actually know what that is. Maybe I'll look into that. Payments has grown very healthily. Hello, Pablo. Hope you're having a good evening, mate. I believe, was it Uber you wanted me to look at, Pablo? I will be doing that next. I'm currently on Meta. Um, so this is the growth by geography. Asia suffering a little bit, but the rest of the world has really grown quite well and holding that up. Operating expense. Okay, so as you can see that this will all be most likely be capex expenditure. So yeah, right. I'm gonna go on to alpha spread now, and I like alpha spread because firstly, a bonus of it, if you're not good at doing values and you have a value investor, it does give you an intrinsic value. Now, don't take that as the value that, like, take that with a bit of pinch of salt because I don't know. Well, they show you how they calculate it there, but everyone's going to have their own way of doing it. So in a worst case, they are around 40% overvalued. In a base case, currently they are 12% overvalued, but that is the premium you pay for such a big company. And then in the best case, they're about 37% undervalued. But if we scroll down and we'll take a look, I'll go back to full screen so you can see everything better. If we look at the annual growths, as you can see, even the last 5 years, we're in triple-digit growths over all four categories, and in the 3 years, we're seeing quite high growth. You can do the trailing 12 months if you want. Don't know if this has been updated to reflect the earnings yet. It hasn't, by the looks of it. No. So be aware that the current or the latest earnings data isn't out yet. Assets to liabilities, I like this visual of it, and you can then just click on it and see where most of it sits. So as you can see, long-term debt is about 30%, less than 30% of their overall liabilities. But even the cash covers the long-term debt. So if they wanted to clear it tomorrow, they could. Now, this is what I like to look at. 80% gross margin is really, really high. I put a focus on return on invested capital. If the company is 10%, my general rule of thumb is that's a good business. If the company is 20% or higher, my general rule is that's a brilliant business. So that's the way I look at that. All the others are still healthy. I pay less attention to them, if I'm honest, when I'm just quickly going through. I am just doing a quick analysis on stream. I would go further, but I will be here until the morning if I'm doing that. And these price analysis are very similar, but a little bit higher. So this is the price target on a lowest, average, and highest forecast. And then if you are a dividend investor, it does show this breakdown down here. Sorry, my light's gone out. Battery's dead. And then you get a dividend safety score, which is quite nice. And then you can see how they are returning money to shareholders, which is quite important for dividend investors. So yeah, financials look really good. Now I'm going to really dissect that earnings. Press release and presentation, please. So obviously I've read out these figures, so I don't really need to look into that. So there you can see a nearly 800% increase in tax, which has taken a massive hit on the net income and eventually the earnings per share. Now, what will be interesting to see is what the earnings per share would have been at without this massive hit. I am quickly going to try and do those calculations. To do that, you can go back on here. Let's say shares outstanding. I always forget which ones these are on. Right. 2534. Where's my calculator? You can't see this, which is annoying. So we have, let's do 20,535 out minus 2,200. Say it's roughly the same tax. Now I need to divide this by the total outstanding shares, which was 2,534. So the earnings per share without the tax bill would have been $7.23, which would have beat the diluted earnings per share. So that's very interesting and good to know. I think I'm going to note that down. Without the tax bill. Now my maths might be wrong, but that is how I would calculate it. Net income would have increased. Oh, it's literally down there. Okay. Diluted earnings per share would have increased to $7.25 compared to the reported diluted earnings per share of $1.05. I'll just zoom in. So that is highlighted there. At least I know I can do the maths. But yeah, that is what the earnings per share would have been without that big tax bill. So other highlights, let's see. Family daily activity had an 8% increase. Ad impressions increased 14% year over year. Ads average price per ad is up 10%. Costs and expenses have gone up 32% year over year. So it's getting more expensive. Okay. They've repurchased 3.16 billion worth of stocks, which is quite good. So as you can see, they're sitting on more. Oh no, free cash flow is at 10.6 billion. So they are quite a good way of paying off that debt if they needed to. And then headcount's grown. So maybe that's where a lot of the costs have come from, is from higher salaries or higher labour. Let's see. What was the revenue? So they expect the revenue to be a little bit ahead of what they've just reported. The tax bill is something weird. It's a bill they don't have to pay from cash, but still have to account for. Going forward, their tax rate will be lower. Costs going forward is caked in new compute. Thank you for that, Pablo. Can I make that? Oh. But yeah, the tax bill is a weird one, but it is reassuring to know that without the tax bill, the earnings per share would have beat expectations by a whole dollar, which would roughly be, off the top of my head, around 13%, I think. Maybe it's a little bit higher. But yeah, a lot of the costs are caked into AI and all the compute power that they are purchasing. So as you can see here, they expect the tax to go back down to 12 to 15% for the fourth quarter. Yeah. If there is any details I'm missing, please feel free to put them in the chat and I will highlight them because I do appreciate it. So they do expect total expenses to be higher in 2026 and 2025, and it will grow at a significantly faster percentage rate, which is, as Pablo has mentioned, driven by infrastructure costs, cloud expenses, and depreciation. And then employee compensation costs will be the second largest contributor, as they will recognize a full year of compensation for employees hired throughout 2025, particularly in the AI department, which a lot of companies are going to see. It's not just the CapEx spending that they're putting straight into the infrastructure. It is also what they've got to spend on the employees. Then Let's see. I don't need to know the rest of this. So let's have a look at the swanky presentation, if it is even a swanky presentation, because some of them I look at and I think, well, that was boring. Sometimes I like a nice little graphic like this. So you can see US and Canada really driving that revenue. Everywhere still increased, which is good. Everywhere still increased. Talked through all this. Expenses as a percentage. Now this is interesting. So cost of revenue is only 18%. So that's where the 82% gross margin comes from. Research and development takes up a total of 30%. Marketing and sales takes up 6%. And then general and admin takes up 7%. That's a nice little breakdown, that. Effective tax rate. Tax rate will drop. I do like to literally write everything down as I'm going. Well, not everything, but all the key points. Like, this is literally all stuff on stocks. But I like to make sure I've got it down there. I mean, I could just watch this back. Excuse me. So yeah, earnings per share going forward should be lower, as they've already said. Capital expenditure year to date is nearly double. Well, it's more than double what it was in 2024. So that's where a lot of the expenses are coming from. Wow. But that was expected. And I think this is expected by a lot of the big companies going forward, as a lot of even software companies are now putting AI into every little thing that they can. I'm seeing it from my daily perspective in my job. So I'm a buyer, and it's an IT buyer specifically. And nearly every solution I'm now looking at or demoing has AI involved. Obviously, some use it as a buzzword to try and catch your attention, but yeah, it is literally everywhere. It's wild. Ad impressions is increasing. That is nearly, well, it's double what it was last year. That's interesting. I do wonder. So we did see a drop in the average price per ad. I wonder if they're needing to do that to remain more competitive. Yeah, okay. So then what I'm going to do is go back, and I am going to look in the news section of stock analysis just to see what is coming out. See if there's anything in particular. Meta plans $600 billion US spend. We will just pick this up. So Meta has said today that it will invest $600 billion in US infrastructure and jobs over the next 3 years. It's doubling down on AI. And it's sealed a $27 billion financing deal last month. Wow, it's building its 29th facility already, data center wise. Okay. Let's see if there's anything else major on here. I wonder if I could. I can't. Okay. That's recent news. What I'm going to do is I'm just going to something like 42% of the world's population use a Meta product. That is insane. Because when you think about it, company info, they own Instagram and Facebook, which are two of the biggest social media platforms. Let's see what they've got. WhatsApp. What is this? Oculus. Workplace, which I've used. It's actually not that bad. Threads now. Forgot about Threads. Yeah, so they've actually got quite a lot of stuff going on. But that is at a base what I would look at. Now I'm just going to try and find any more news or press releases or anything. My lights are dying, so I do apologize if the lighting goes bad. Pablo, do you think there's anything in the Discord that is probably worth a look at? Where's trading 212? I sometimes just quickly scan through the news and trading 212 just to see. So they're getting quite a lot of price target upgrades in the last week. Sometimes there's so much deep stuff on trading 212 or so many of the same reports. It's quite hard to find the stuff. I'm just making a little post. Right. And I'm just going to quickly check the Discord just to see if there's anything that I would add. Meta. Right. My thought is the share price has dropped mainly due to not knowing where CapEx is going. It's not like a Microsoft, for example, that are expanding cloud services. That's a very fair point. Are you invested, Pablo? Right, let's see what people are seeing. It would be interesting to see if they do give a breakdown of where those costs are going and how they're going to use the AI. Because if they're spending all this money outright to possibly have some job cuts in the future, or to deliver some heavy efficiencies for the business, I think it's a really good thing. You've been invested for probably about 8 months. Very nice. What's your average, if you don't mind me asking? But yeah, that's it for. I think that's going to be it for Meta, unless there's anything I've missed that you can think of, Pablo. But that is just my quick and base analysis. Next, we're going to jump into Uber. I feel like the presentation didn't really give away much, which I guess that's fair. So let's open up Uber. That looks like a steep drop, doesn't it? But it doesn't actually look as bad as it is. I'm just going to find the earnings quick comparison. I rarely use Uber now. I used to use it a lot when I lived in a city centre, but I don't use it at all, really. And if I order food, I don't tend to do it through Uber. I tend to do it through Just Eat, just on personal preference. Here we go. Right, Uber. In the 500s, but a dollar cost average every week, so don't time the best ins. That's fair enough. But if you're dollar cost averaging in every week, then really it's still good. It's still going to average out, and you're still going to be doing well. Let me just check the stream health real quick. Excellent. We've got no issues there. Yeah, brilliant. Everything still looks good. So now we're going to take a look at Uber. The screen. So in the last week, Uber are down 4.6%. But if I stream out the month, it's down from 100 down to 91. So it's down 7. Well, from that point, it's nearly a 10% drop, really. It's about 8% drop, which is very interesting. But if we take a look at the earnings guy on Twitter, who has the good breakdowns, they beat earnings per share by 351%, and they beat revenue by 2%, and then earnings per share year over year is up 159%, and revenue is up 20%. So very healthy earnings on the face of it. I am going to look on the Uber website first, just because I've completely forgotten what they do outside of taxis, if I'm honest. I wonder if they'll have the information here. They don't, but I will pull it up. I know you can now book trains through them. So Uber, you've got Uber Rides, Uber Eats, Courier Services, which we'll get into, Uber Freight, which I did hear about on a podcast, and then scooters. Hello, Brad. How are we doing? I've just looked at Meta, and now I'm looking at Uber. I'm just doing base analysis on them, because if I was doing a deep dive, I would probably be here all night. I'm just taking a look at them. They apparently also do Uber Health, which I was not aware of. But I'm going to jump into the financials first, purely because that is what is being released. Oh God, is this the presentation? Yeah. So add this to the stage. So CEO has come out and said that they're building on momentum by investing in lifelong customer relationships and harnessing the transformative potential of AI and autonomy. So AI is literally just everywhere. Yeah. So trips during the quarter grew 22%, which is very impressive. Monthly active users grew by 17%, but monthly trips per monthly active users grew by 4%. So that is some strong growth, actually. I mean, I think Uber really is the one when it comes to booking a taxi. I can't remember the last time I flagged down a taxi or rang a taxi rank, because they don't do it anymore. Gross bookings grew 21%. That's really good. Revenue grew 20, income from operations grew 5. Adjusted EBITDA grew 33%. Wow, impressive. Whenever a company's name is used as a verb, you know they're bloody big. That is very true. Instead of, I can't remember the last time I say, should we get a taxi? It's always, should we get an Uber? That is a fair point, Will. I've never thought of that. Where else does that apply? Ooh, what other company is like that off the top of your head? That's an interesting thing. Google, yeah, I'll Google it. Do you know what? I didn't even think of it like that. The amount of times I probably say to my girlfriend, I'll Google it. When, like, do you know when you're watching a film, you're like, oh, I recognize them. Yeah, I can't think of any of us. Interesting. Anyway, outlook for 2024. They are aiming for 17 to 21% growth. For quarter four, sorry, not 2024. That was last year. And adjusted EBITDA is going to be 31 36. Very nice. Just taking notes. Netflix and chill almost. No, I don't think that's the one, Pablo. When you're going to get into Ondas, then Johnny Boy. I haven't actually looked into it. Maybe I do need to take a look into that. I watched Jay's video on it and everything looks impressive. But I need to do my own deep dive, really. Yeah. I'm sitting comfortable with Rolls Royce as my defense related sector, Brad, if I'm honest. Duolingo blood. I don't know if that's in relation to the verb thing or if you're asking me to look at Duolingo. Right. That growth buttons is quite good. Freight is not seeing any growth, so it'll be interesting to see what to do with that. Freight is more like B2B, isn't it? I didn't even know they'd done that, but obviously I wouldn't. Rose is a banker, to be fair, it is. And another thing I like about Rose, sorry, is, well, why I think it's healthy for me to invest in it right now is the price hasn't really changed over the last few months. So I'm happy accumulating at this price because I do see it going further. I think in the long term, I personally see it going to around 18 to £20. In the midterm, I see it going to 15. So absolutely, I am going to be buying more rolls, but I have a video coming out on that, so watch out for that. And this is just info. I'll look into these a bit more on stock analysis because it's just a nicer way. Right, I'm done with that. Let's see what the presentation holds. Thoughts on short and hood? I don't know yet because I've not looked into hood. That is next after Uber. Are you short and hood? I don't think I actually know anyone that actively invests in on the Robinhood platform. I know it is very popular. I think most people that I speak to invest on Trading 212. I think Will is the only what's that word? Oh, I'm gonna look like a right idiot. Will's the only anomaly to that. Rolls Royce is defo a good stock to dollar cost averaging. Yeah, that's my opinion. I always remember Millsberry with the times 3 leverage. I wonder what he is doing nowadays, or what he's times 3 leveraging now. Exception. Thank you. Thank you for that. You're planning to short Robinhood down to $50 to $40. Fair enough. Well, I will get on a Robinhood. That is after Uber. So if you do want to stay around for that, let me know. In a crash, shorting a hood would be a good call. Their business would vanish in a prolonged crash. That is an interesting take. Obviously, that is not financial advice from Pablo. But yeah. Diego, are you wanting me to look at Trump media? So, Uber has partnership with NVIDIA. So they're using all of their chips for AI training to try and build the Uber network, which then builds the Uber ecosystem. Ooh. Okay. So they say massive expansion potential in the retail space. So this includes pets, electronics, home, beauty, and grocery. That'd be very interesting if that takes off. I can't imagine going, I need a new 40-inch TV. Don't worry, I'll just order it off Uber. Interesting if they can address that. This is feeling a bit laggy now. Sorry about that. So this is where they're using AI to try and convert more eaters to decrease any defects from the carrier business and to fulfill more baskets with the merchant business. See, this is a lot better presentation than Meta's in my eyes, although it is very bright. There's a better vision of all the growth that they're seeing across the trips and the monthly annual users, paying customers, sorry. Gross bookings is very nice. So we should see a spike in quarter 4 as we enter the golden quarter. But even quarter 2 is ahead of quarter 4 last year. So that's very interesting. Shows that the growth is there. Delivery is very interesting because I don't order much delivery anymore. So the fact that it's still growing to me seems a bit like an alien concept. I'd sort of go out a bit more now. Freight highlights. That is operating at a loss and it's not really expanding. If anything, it's shrinking or staying stagnant. So that's not good. Be interesting to see what they do to address that, or if they just drop that off altogether. I'm going to look at all this next in my format that I like. So that's Uber's presentation. Service charges and delivery fees are getting extortionate on Uber Eats. They are. And on top of that, they already take commission off the people, like the companies that are using the platform, which is just insane. Do you use a LISA? As I've seen you're saving for a house. If so, what LISA do you have? And is it cash or stocks? So I am saving for a house. I have a cash ISA. Is it a cash ISA? No, lifetime ISA, sorry. Which is a maximum of $4,000 per year, but you get a 25% bonus, so it's a no-brainer and get that 25% return using that. And then I've got a separate house pot that is completely separate to my investments, and I'm doing that because I don't want to risk any deposit in the stock market. Even though I'm quite confident in my picks, I don't want to have that risk there. So that just goes in a separate savings with I would say a semi-decent, well, it is a decent interest rate. But yeah, out of the 60% that I save or invest from my salary, 90% of that 60% goes towards the house. Yeah. It's hard, man. It's a long game saving for a house. Long game. Right. Let's have a look. I'm just pulling up some more stuff on my screen ready to look at. There's nothing else on there. Let's look up the news quite quickly. Okay. So this is a bit like what Grab are doing, I think, by the looks of it. So they've announced a partnership with Toast to help restaurants drive guest demand. Multi-year partnership. So this is to try and help restaurants better manage digital ordering operations, enhance guest experience, and grow sales. So if this is going to operate in the way that Grabs does, where you can book tables through the app and then get discounts for the restaurants that you're eating in, I think that'll be quite good. So they're going to build new tools that enables restaurants to attract new guests and retain existing ones, including offers and advertising integrations. So this is really good. I think this will be good for restaurants as well. But yeah, Brad has said you ordered from your local cafe. It came to £16 for 2 sarnies, few hash browns, and 2 cans of Coke. And the cafe, it was £9. Delivery and service was £4.50 for the 1.5 miles. That's crazy. Oh, here we go. It's the real Mr. Bean. I'm going to have to show you something, aren't I? So if anyone isn't aware, I went as Mr. Bean for Halloween. But Teddy does sit on the desk. I'll not do the impression. That is for a special live stream. But yeah, Teddy sits right between my two screens. What do you make a video on lices in the future? As at least people in my age groups, 20s, don't really know much about that instrument. I can do, if that's what you want to see. Let me add that to the list. But yeah, to be fair, I'm still in the 20s. Oh, hello, Tessa. Right, okay. Fair enough. Where's my videos? Right. So you want a Lysa / house saving video. I would feel a little bit hypocritical making a house saving video when I don't own a house, if that makes sense. But I can work on it. I probably won't be buying to the end of next year. So Uber Eats have expanded relationships with Kroger, which is a massive US chain. Uber to deploy one of the world's largest networks of autonomous vehicles, robo taxis. Audi's joined Uber Eats. They've launched drone delivery. Wow, okay. Wow. Okay, there's quite a lot of good news on Uber, actually. So let's take a dive into the financials after doing that. Can still talk about your journey saving for a house, though, bro. Very true. Very, very true. If anyone's gone through it, it is a long game, isn't it? It is difficult. Just going to take a drink. Uber times on DAS soon. Is that official, or is that what you're hoping for? Is that what you think? Because that would be very good for Ondas if that is true. But it looks like they said it was with Flytrex. Have I got that right? Obviously, Uber also own a lot of companies, or have a stake in a lot of companies anyway, sorry. Year to date, they're still up 50%. So that's quite impressive. Let me go on full screen mode. And we'll take a look into the financials. So, revenue growth is healthy but slowing. Expanded massively in 21, 22. It's not slowing, it has slowed, but it is starting to increase again. In the high teens. I've already invested in Grab. I can't invest in Uber, surely. Undash drones are too expensive for that. Will be Amazon and DoorDash. Fair enough. Right, let's take a look. Gross profits increasing. Earnings per share is massively increasing. Gross margin sits around 34%. Operating margin is growing. That's good. Have Uber only recently turned profitable? Hmm. I'm up anyway, bro. Got to be up early with the baby. See you tomorrow. Well, thank you for dropping in, Brad. I appreciate it. And I hope you have a nice weekend. Uber was good a year ago in the 70s on the fear of Tesla self-driving. I've not kept up with them recently. Fair enough. They were quite low last year. It'll be interesting to see how they expand the other pillars of the company, Pablo, to see if they can mitigate the risk of other companies bringing out robo taxis or self-driving taxis, whatever you want to call them. Long-term debt, they do have quite a bit of it, but that's okay. Looking at it, that is all right. Net cash has grown. So obviously they were in net debt for a couple of years, but the net cash has grown. Let's look at the ratios. PE, is that accurate? Is 11.8? Yeah. So they are expected to, going forward, perform less. Interesting. That's the first time I think I've actually seen that on forward PE. Debt to equity is healthy. Okay, let's go on alpha spread now. Archie, forecast. So forecast looks at them being around $80 to 150, but take that with a pinch of salt because that could be an outlier, to 110. So they do still see some room for growth over the next 12 months. These price targets are all from the recent earnings, which is interesting. Okay. I didn't do it by KPIs today. It's not giving me that info. It's not giving me the breakdown that give me on the last one. Oh, here we go. Sorry, metrics. Growth in monthly active users, growth in bookings, growth in trips. S&P Global. What you want to know about the S&P Global, Diego? Mobility is up, delivery is up. I think, Pablo, if delivery starts to get close to mobility or higher, then the fear of any autonomous taxis will outweigh that. But I think even if, say, Tesla bring out autonomous taxis, would they not just try to use the Uber platform and maybe states or cities secure like a London's Waymo, Texas is Tesla sort of thing? Or do you think that like limits competition? Is a competition law? They're seeing growth globally, so that's quite good. A lot of growth in admin and sales expenses. If you look here, intrinsic value from alpha spread is around $60 in the worst case or $130 in the best case. But current price, I would say it was overvalued. Got a narrow economic moat. This is also what I like about alpha spread, by the way. You can get overview, business segments, economic moat, recent earning calls. Yeah. S&P Global are a great company for me. Still overpriced. My buying is $450. I've never actually considered buying the S&P company. I did consider buying the London Stock Exchange Group, actually, at one point, but that didn't go further. So let's have a look at annual revenue growth. Has been insane, and they are touted to see further growth going forward. That is roughly 19% per year. going forward. Earnings per share looks to take a hit as an estimation, but grow from there. Let's go down to the margins. Long-term debt is about 10 billion. Cash is around 9 million. Okay. So gross margin is around 34%. As you can see, they've been on a real path to profitability here. So then they've sort of got that climb of, right, let's make this work. Return on invested capital, as I did mention for Meta, if it's over 20%, I would see them as a great business. So the fact that are higher than 20% is quite good. LSD is a good call. I've not kept up on the valuation. Yeah. And then that's the upside from forecasts. And this is how much they're returning to shareholders per year on top of the share price growth. So it's looking steady. I do like Uber. So we don't have a Discord community for Uber, so I can't pick up anything in that. But I think at a first glance, Uber does look. Obviously, it's a solid company. Sorry, I'm just making notes. Obviously, it's a solid company. There was no denying that. But I would say Uber, to me, is more of an attractive investment from instead of Meta. Because like Pablo highlighted before, you don't know where that 600 billion CapEx expenditure is going with Meta. Obviously, it's on AI, but it's not as clear. Whereas Uber have got their clear plan and it's in their detail. But yeah, Diego, what's your thoughts on B&M bargains? I see this one YouTuber, Geordie Pig Investor, who's invested quite heavy in it. Any thoughts, and what's your thoughts on dividend investing? So I do actually have thoughts on B&M. I am going to pull the financials up just to back it up a little bit. So Diego has said, for anyone not watching, I personally wouldn't touch BME with a 6 foot long stick. I personally wouldn't touch B&M with a 10-foot barge pole. I don't think it's great. I don't think it's great at all. I think they're performing really poorly. I don't think their business is quite as efficient as it could be. I'm just double checking. They have quite a lot of long-term debt and long-term leases, but their total liabilities isn't far off the total assets. So their debt to equity ratio is 3.4. A higher ratio than 1 implies that it's got a lot of debt. So if it's a 1 ratio, it's like debt is equal to what's on the book, but they've got a high debt ratio. If we look at the share price, so I just realized I'm not actually showing it. Over the year, they're down 57%. Over the last month alone, they're down 36%. But yeah, I don't think it's really performing well. If we take a look at, they don't even have it on here. That's really annoying. I genuinely wouldn't touch it with a 10-foot barge pole personally. In terms of the dividends, they're paying out. That might not be accurate. If that's accurate, oh my god, that's accurate. That'll be higher because of the recent share price drop. So I think when I looked originally, it was around 9%. Yeah, I think when a business is performing that poorly, and they've got that much debt, I'd rather they pay off the debt than pay out dividends. So I don't think they've got the priorities right, which is very interesting. And I think it can become a bit of a dividend trap because people will say that and think, oh, wow, that is an amazing yield. But it's not. Dividend growth. It is still growing its dividend, which is insane. They pay 3 dividends a year. Yeah. Yeah. My opinion on B&M, I would not touch that for 10-foot barge pole. In fact, it couldn't even give me the money to invest in B&M. I'd just say no thanks. Not worth it. But that's my opinion. That's not advice. In terms of what my thought is on dividend investing, I think it can be a good tactic. It is definitely can be considered more of a slow burner in terms of an investment strategy. But I think in the right time of someone's investing cycle, it is the right thing to do. Long term, I'm looking to invest in growth stocks for 15 to 20 years and then move into dividend investing, so and sort of either soft retire or live off it completely, or use it to help fund things for my future family. I think it does serve a purpose, and it depends what part of your investing stage or cycle you're in. So yeah, B&M wouldn't touch with a 10-foot barge pole. Dividend investing, I don't mind. It is a strategy. Strategies are different for serve different purposes for different people's stages of life or their risk appetite. So I don't think it's a bad thing. Dividend yield is skewed due to them paying a special dividend on the instruction of the old board, which they have now stopped. All right, okay. Did not know that. That's some interesting information. Thank you for that. But yeah, even still, they've got quite a lot of debt. Just pay your debt off. Then focus on your dividends. But Diego, I don't mind it being him sometimes, but every time I go in, I'm like, get me out of here quickly. Once I picked up what I needed. And if you can't tell, how do I? If you can't tell, bear with. If you can't tell, I like Lego. Got Lego there. Got Lego down there. Oh, you can't see that. Got Lego up there. Got Lego on that side. I've got loads in the wardrobe. B&M's good for deals. So sometimes it serves its place depending on what you need. But yes, dividend investing is relative to investment stage or risk appetite. So now we are going to take a look at Hood, which is talked about quite a lot. Let me just take that down. So Hood. I will just find their earnings. What they did, very good. There we are. Oh no, that's July 30th. November 5th. There we are. So, when was November 5th? That was this week. So if I bring up Hood, that's true for Lego. Good night, mate. Thank you for dropping by. I appreciate it. So Hood is down 10% on the week. And I believe someone said they are planning on shorting Hood, which is interesting, especially during market crashes. But yeah, but if we look at the earnings per share beat expectations by 13% and revenue beat by 4%. Earnings per share is up 259% year over year and revenue is up 100%. So very well performing financially. If we look at presentation will be nicer. So if we look at some of the highlights, funded customers is up. Oh, that doesn't even tell me a percentage. That's really annoying. But total platform assets and funded customers is up and growing quite nice. Total platform assets is up 119% year over year. And then if you look at gold subscribers, which I don't actually know what a gold subscriber is in terms, I can't imagine a subscription base for an investing platform. But that is up 1.4% in terms of total. And then net deposits has increased massively. I feel like Q3 was a big deposit time for retail investors. I am going to go onto this one because I think it's easier to read. So total net revenues increased 100% year over year. Transaction-based revenues increased 129%. Cryptocurrencies was up over 300%. That's insane. Wow. Net interest revenue increased 66% year over year, and other revenues was 100% increase year over year, primarily due to Robinhood Golden subscribers. 100% right with your thoughts on dividend investing. Dividend stocks are a good stabilizer in your portfolio in downturns like this week. My growth stocks are down, but my dividends are up. That is very true. That generally are more resilient stocks. Yeah. So let's have a look. Operating expenses is up 31%, primarily driven by market and growth investments, which is fair enough. It has clearly paid off. Investment accounts increased by 11% year over year. I wonder what net deposit is going to be for the next quarter. Average revenue per user increased 82% year over year. Wow. They've repurchased 107 million worth of shares, and they were buying them at a price per share of $105. So total share repurchases actually were 110 million. Wow. Highlights. They are advancing the platform for active traders. I have seen, though, some people on Twitter getting issues of where they're being banned from trading because Robinhood thinks they're professional, which is interesting. Whether it's true or altered, you can't know nowadays. Okay. So they're leading innovation across global financial ecosystem by offering what they call a bit stamp, and this allows clients to enhance its global crypto offering. Maybe I need looking at that because I do want to start adding crypto into my portfolio. Additional operating data. Margin book was up 153% year over year. Okay. Options contracts traded increased 38% over year to a record high of 610 million. The CFO, which can leave a lot of people feeling skeptical, is leaving next year. So that could explain part of the reason for the drop. Some people don't like when the CFO goes because they know everything financially about that business, and they are the backbone, really. Financial outlook. They are not providing a 2025 outlook for operating expenses. Okay. They're unable to predict with reasonable certainty the impact of certain things. So maybe it's the lack of guidance and outlook is also contributing to that price drop. That's interesting. I guess though the nature of the business that is going to be quite hard. And these include provision for credit losses, significant regulatory expenses, and they could have a significant impact on total operating expenses. Okay. Interesting. Our 2025 expense plan includes growth investments in new products, features, and international expansion. The employee bonus has increased as they exceed the performance targets that are set at the beginning of the year, which is obviously good. The stock price appreciation has triggered the 2019 reward for the CEO, which was not included in the outlook. Okay. Wonder how much he's got for that. So let's take a look at the financials. Revenue is growing nice. And the diluting shares, okay. Didn't realize they were doing that. Well, there probably aren't anymore after the recent share buybacks. That can't be accurate. Yes, it is. Okay. So that's a bit of conflicting data. This is why you've got to look everywhere. Earnings per share, as you can see, that growth is quite nice. Let's take a look at the balance sheet. Sitting on, was that 4 billion cash? 4.3 billion. So they've got quite a lot of assets, which you would expect. Quite a bit of short-term debt there, actually. No long-term debt. I wonder what short-term debt is in the case of Robinhood. I would have to do a really deep dive to find that out. Is that just what they owe to their customers in terms of when they sell stocks, or I can't imagine it is. Book value per share is growing. It's up. And then if we look at ratios, market cap growth is very nice. PE ratio, they haven't been given a forward PE ratio, but they're trading at about 54. Debt to equity is higher than I would like. But I need to see if that's, I would need to do further research to see if that's the nature of the business. And the product that they are selling. Okay, so let's take a look at Alpha Thread. Intrinsic value, obviously this is seen as a growth stock, so the intrinsic value tends to be overvalued on every aspect. Fundamental analysis. Okay. Yeah, right. Okay, so it's got no economic mode. So business segments for anyone that doesn't know: brokerage services, cash management and payment, and Robinhood Gold and subscription. What actually is this Robinhood Gold subscription? What does a Robinhood Gold subscription do? Oh no, I don't want to join. Get 3% match on annual contributions. That's $210 when maxing out your IRA. Oh, it's a card. Then 3% cash back on all categories, invest or earn interest. Unlock private banking. Trade like a pro. I'm gonna have to look into that a bit more. So, key benefits of Robinhood Gold. I like it when you get a decent AI overview. Higher interest on uninvested cash, IRA match, larger instant deposits, advanced market data and research, margin investing, exclusive credit card access, 5% cash back on travel, extended trading hours, and discounted future and index option commissions. So they save money on their commissions. So that's quite good if you're trading. Wow, okay, interesting. I know nothing about this company, but yes, I think you could be right with customer money and debt being mixed in with earnings as banking stock. That's what I was thinking. Are they? I know this might. I know they're like a mixed bag. Oh, but then JP Morgan is. I was going to say, there's not really another purely investing platform out there, is there, on the stock market, as far as I'm aware. But now they've got a bit more banking services and whatnot. Earnings per share more than tripled from last year. Product growth is hitting record trading volumes. Diversification in the products that they can offer, to be fair. Okay, so cost is come up about 40 million more. I wonder if it's cheaper to buy Robinhood shares on the platform. So let's have a look at the financials. We're seeing strong revenue growth. Operating growth really, okay, it's been up and down, which is expected with the cycles, but they are in the positive for that now. Net income is equally the same, and they projected to continue growing. Earnings per share, equally the same. Let's go down to the margins. Let me just double check this. So they have no long-term debt, which is nice. Okay, fair play. Fair play. Gross margin is 95%. So they've got the highest gross margin of what we looked at. Wow. But obviously a lot of this money is going back into new stuff. Return on invested capital is 10%. So they hit the good business mark in terms of what I would like to see on return on invested capital. Return on capital expenditure is heavily increasing, or healthily increasing, shall I say. Let's look at expectations for the next 12 months. So on the lowest, I do see about 40% downside, but on the highest, I do see 40% upside. Take that with a pinch of salt. Analyst forecasts aren't always best. This might be out of date, but buyback yield is minus 1.7% currently. Be interesting to see what that is when they complete their share buyback for the year. I am going to go back on the news section of this to see if there is any news. Okay, let's quickly watch this video just to see what they've got to say. I will just watch to the end of the headlines when they talk about Robinhood. I mean, it looks like they talk about 10 seconds, but I want to listen to Bitcoin because that's something I want to get more involved in. Also, I did actually used to own some Solana when I done some main coin trading. But yeah. Pablo has said all good metrics, but it's the cyclical nature of the stock worries him. Good as a small position, maybe. Yeah, I would agree. The cyclical nature of the stock can be worrying, but is that something you got to weather? And also, are these still going to continue to perform as well as they do when other platforms start to put crypto on them? Who knows? Who knows? I wonder if so much crypto is being traded because we've gone through the halving cycle this year. So obviously it's been talked about quite a lot. I wonder if going forward it's going to be talked about as much, or if it's going to fall a bit off the face of the earth in terms of um but then crypto is like that much mainstream again. This is quite funny. Um so this guy's gone back above his average and he can breathe again. That is quite funny. I'm just scrolling down Twitter because sometimes Twitter has some really good information on Twitter. Okay, let's have a look at this, which I must have missed. Robinhood now has 11 separate business segments, generating more than 100 million revenue on an annualized basis. So, options trading was the first one. Then we got margin interest and equities trading. And then we've got crypto trading, margin based securities lending, cash sweep. I don't even know what some of these mean. Fully paid securities lending, gold subscriptions, instant withdrawals. And this year, Bitstamp and prediction markets has took that over. Took that over 10 different segments, now earning 100 million in revenue. That's quite impressive. I would not have spotted that if I didn't go on here. They brought out Robinhood Ventures in September. Okay. The presentation is actually quite healthy. I'm not going to go through it because there's a lot of information on every slide. And I feel like I really need to sit there and take the time with this. If I wasn't. Okay. Very interesting. I'm just going to see if there's any more news stuff I can pull up quickly. Doesn't look to be. So yeah, that's it for the 3 stocks. Please don't take anything I've said as financial advice, as I did disclaim that in the beginning. But Meta, I think, looks good. Interesting that the earnings per share would have been beat expectations if it didn't have that massive tax bill. Obviously, Meta is a healthy company. Everyone knows what Meta is. The insane stat that around 42% of people on the planet are signed up or use a Meta product. There we are. So that's a very interesting stat. Uber, I was impressed with Uber, actually. But I don't think I need another stock like that in my portfolio because I already own Grab. And then Hood, like we've mentioned, is very impressive. The metrics all look great and it looks fantastic. But it's quite cyclical in the nature of the stock. So yeah, just double check it. Everything just to make sure I've not missed anything key. Doesn't look like I've missed anything I can think of. So unless there's any comments in or anything you need me to look into, I may end up calling that a night as we hit the 1 hour 30 mark, which is roughly what I was aiming for. But if you have made it all the way through here, thank you. And thank you to everyone that's participated. I appreciate the support. I am going to try and make these a weekly thing going forward, apart from when I have trips or plans. So I will try and live stream on a Friday evening. Might start a bit earlier than what I've done tonight. But yeah, thank you, Will. I appreciate it. Thank you for your time, and hopefully I will see everyone in the next one. But this will be available for people to look back. Enjoy your weekend as well. Goodbye, everyone.